Good morning, Charan. Good morning, Charan.
Good morning,
Good
madam.
morning.
Yes. And, I'm connecting with the one device today because I'm having some issues in audio issues in talk. I hope you can hear me. The problem is I have increased my device volume up to 100%, but I'm not getting you properly, and some issues are there. And if you have anything, please connect. If any questions or anything are there, please type those on chat for today, bearing the uh, difficulties and all the inconveniences. So apologies for that, and please connect with me um, on chat. Okay. So I hope at least I could see that. Okay. So can someone again verify me on chat? You can hear me?
Yes, we can hear.
We can hear you, Miss.
Yes. Thank you. Okay. Thank you. I got the confirmation. Thank you for that. My daughter has put the other device somewhere. I couldn't find it out. So I'm just surviving with this with the microphone. So a lot of audio issues. Right. Students, we have completed the report. I mean, not completed. We have done mandatory reporting, that means the regulatory reporting, and then the voluntary aspects. And then we discussed on an important concept called integrated reporting, which is being accepted and is being practiced, and to a greater extent, thinking that this is going to be deciding the future of corporate reporting, as well as this is going to be the norm of corporate reporting. Okay, and I think we completed the discussion, and I think I showed you some examples as well. That was 2021 somewhere back, but please refer recent annual report. Today, what I thought was, if you have any questions, I think the examination, I mean, not the fixed one, tentatively, they have said that the first week of November, no? On chat, can you, if you have any idea, they have said that first week of November, no, for you all to get ready for the exam.
It starts from 4th November.
Yeah, I have not, Prasad, I have not uploaded or shared any slides on the screen. I just wanted to know till first of, okay, 4th November, no? Yes, tentatively, yes. And I think we are meeting again on a physical setting around third or second week of October as well. Right? So what I thought was, as Professor Ape Singh wanted me to complete. Otherwise, that will be a problem. So, sir will definitely ask me whether you completed that part. I couldn't have done. So, uh, this financial statement analysis part, uh, I think he told me to complete the market performance of the investor ratios. So, have you all completed that as well, along with the profitability ratios, liquidity, efficiency? There are a set of ratios. So, have you completed the market performance of the investor ratios as well? I think you may not have, because that's why Professor Abhay told me to start from that area. So, can you remember? Do you have anything that you have done this market performance or investor ratio under the financial statement analysis? Wait, I will share. No, this may not be the handout being shared by Professor Abhay. I hope you are getting me clearly. Okay. On the very first day, before I start, what Professor Abhay told me was he has completed or he has done up to up. I mean, he has done ratio analysis, and uh, for me to start with this, ratio is done. Let's see. Um, Students, this is this may not be the same material that you used. Okay, this is what I'm using for um, the teaching and learning purposes regarding the ratio analysis, right? So here we have categories now, right? So you all must have done up to this part, and he wanted me to start from this. So one student is saying that you all have not done one. You all have not done ratio.
No,
I'm
we
confused.
have done ratio up to we have done the
අපිට
working
ලාවට
capital and
ඇහෙන්නෙත් නෑ මට. I really have
and
not
we
find
have
the
done
other
the
device
ratio
maybe
analysis.
somewhere.
Up to we have done the working capital
Students,
cycle and
can
all
you
the
all
things.
please bear the inconvenience and let me know on chat whether you all have done. Shall we start from the market performance or you all have you didn't do this one? Yes, you all have done up to working capital ratio. Right. So will you be able to upload any material? Then I know to what extent, or else that's okay. And thinking that you all must have done, don't worry. In setting the papers, I will definitely, contact Professor Abhay and don't worry, I'm not going to test on you on these things because maybe somewhat different, but it's more or less the same. Uh, so let me contact Professor Abhay and in setting the paper, if a question is being included in this area for you all, and don't worry on that. But yes, okay. So these are the set of ratios, right? Can you see this list? Profitability, short-term liquidity, efficiency, long-term solvency, market performance. Students, just give me a minute. Okay, students. So I have uploaded two files on chat. What we will do is we will start from this market performance. Okay. Or else I have no idea. What do you say? You want to go through the ratio analysis? I mean, maybe not the calculation from the beginning. You all have done up to some stage. You all have done some stage. Uh, uh, so what is the from the concept, right? Right, horizontal trend analysis you all have done, and the type of ratio, okay, methods of comparative profitability, working capital. After solvency, we have capital gain and interest cover, total cost plan. Okay, right. So the last slide. We open this screen. So this is what Professor Besenga has given for you all as the material. No? This is the last slide. So yes, okay. So assuming that you all have done up to this part, shareholder prospects or the investor related aspect or the market performance aspect. So we will be calculating these ratios, EPS, PE, and dividend yield ratio, dividend cover ratio, dividend payout ratio. So these are the main, as he has already given, and he has also said. So these are the set of market performance or the investor ratios, earnings per share, price earnings ratio, dividends yield ratio, dividends cover ratio, dividends payout ratio. Right. So I think they have given this numerator denominator, the ratio calculation, what is coming up and what is coming down, this the ratio with the numerator denominator. Okay. So yes, from this point, we'll continue to my set of things. up to this part. Right. So now I will upload this handout. Don't confuse with these different materials and I'm giving this, but you can connect the same set. I'll show you. Don't worry. To the last slide of Professor Abhay Singha for this session, I mean for the ratio analysis one. What you can do is you can connect from here. Students, I have uploaded saying, I think I have uploaded it before. So it says topic 4, financial statement or the ratio analysis 2. Can you download it? And also I have uploaded an attachment. Let me do it again. So there are 2 files on chat recently uploaded. One is, it just contains a question throughout and where you will be getting the figures for your calculation. And the first one is financial statement analysis, the material or the note. Can you download it? Is it visible for you? Is it visible for you? I think mistakenly someone's camera and the microphone must have switched on. Okay. That's okay. Things happen like this, but I don't know whether I can't hear anything. So because I'm having an audio problem, you all must be hearing the sounds and which must be disturbing. So just let Janani that her video and microphone is switched on. Okay. Right. So students, can you download the 2 ratios? The 2 materials on chat. One says topic 4, financial statement analysis 2. That means the part 2. And another one says financial statement analysis attachment. Can you download it? Phone එක අරගෙන අපේ අතට වෙනවා. ඕන් වෙනවා. Okay. So then, and please let someone please go chat. I hope you are hearing the noises and voices, even though I'm not, because I'm having an issue. Okay. Right. So for the same handout, that Professor Abhay has given for you, so please, you need to consider from this point onward. Okay. This slide number 32. Forget about everything, right? That's okay. So forget all the rest. Please forget and start your discussion from 32 to connect with the market performance or the investor ratios. Okay, right. So then one by one, I think what I have done is, this may be bit, you may be knowing this stuff and just showing the ratio. I have given an explanation as well as the questions, and I want you to do this one. Right. So before on top of everything, you let me know on please on chat, okay? speak and be interactive. But today I'm asking you to, write the thing on chat. So I'm sorry for that. Um, why we need this investor ratio? Why? We have set of, a list of market performance or investor ratios. And can you all tell me? Yes, okay. Before that, you all tell me why company need to do or calculate or to interpret this set of ratios, analyzing their market or targeting their investor. Why? Okay, thank you for the. I have been talking because this is not very familiar for me to, unmute and with microphone thing. I have been talking by muting the mic. Yes, as you correctly said, to attract the investment, and this is for the potential people, potential investors, isn't it? But you have current investors as well, and investors are also different types. Let me come to that in a while. So definitely to keep your present investors and also to attract the potential investors. And Divanka saying to get investor interest in especially the listed company shares, yes, right? Because we need to provide attractive financial results, not the manipulated one, but the actual, in order to attract and keep the investors with us. And Virat saying to indicate the relative market performance of a company. Yes, how we have performed, to let the other people know, to other stakeholders know how we have performed in the market and what is our price. So out of the price, how much we have paid, out of the profit and how much we have and from how much we have, how much we have paid as dividend. So likewise, different stakeholder categories would be interested on apart from the investors. So yes, to indicate the relative market performance, how we have performed in the market. Yes, good. Thank you. Appreciate. And so this is the list. Earnings per share, price earnings ratio, dividend yield, dividend cover, dividend payout ratio. Like from this point onward, it's a matter of just changing the numerator denominator. You got my point. Right. So price earnings ratio is, when the denominator comes, the opposite or the reverse of the numerator denominator would be another ratio. So, you don't, you and student, if a question is going to, come in this area, and you should be knowing that we are not going to give you the ratios. Okay. So you should be knowing what is coming as the numerator, what is coming as the denominator. Right. And now tell me, there are, we need to do this thing, as you correctly said. And do you think that all the investors are one type? And what type of, what different types of investors can be there in the market targeting this, investor ratios, right? This is for the investor, right? This whole set is for the investors. Do you think investors are also the, they are having the same expectations, same knowledge? Yes, obviously may not. Maybe a financial analyst or a brokering company or an agent would be supporting them with these calculations and everything. Maybe not the investor is doing all this stuff. Maybe a stock brokering firm or a financial analyst which they have hired, they are doing this for them. right? Whatever. Do you think that all the investors' expectations through this market, performance, expecting the company to perform in the market in the, uh, well, do you think the expectations are similar? Or what different types of investors that you can see in the market? Any anything that you would like to? Okay, yes, good. No, yes, yes, good. That is obviously yeah, good point. No, right? This is not, for the whole as a whole set. We can't be, targeting the potential, these things. No, there are risk takers and reverse risk averse. You know, uh, in individual investors, right? As companies also, institutional investors are also, they are different. So their level of investment is also different, depending on the different risk-taking ability, right? Yes. Any other point? Thank you, Shania. Any other point? Do you think this, for the whole set, uh, their expectations are different? Do you think investor expectations are, are same all the time? What type of categories of investors that you can see? Okay. Any idea? I think you're just, coming in the track that they want. Could we say that some investors are value investors who look for EPS growth versus others who look for constant dividend payout? Okay. Yes, I think you're connecting, uh, you're coming to that right part. Any other thing? Yeah, taking that. Now, can you tell me what type of different gains in terms of this? I know for sure that you all must be investors in the stock market. What type of gains mainly that you can, by looking at this also you can say, because some are always looking for this EPS growth, earnings per share growth, okay? And some are, they are just satisfying with this dividend payout. See the extremes. That means some, want to see EPS definitely something to do with what? In earnings per share. Earnings per share. That means some investors are really, really worrying at the company's earnings. That means the profitability side. Some other investors, they always, when they get the attachment, the financial statement, the dividends part. Now, can you get something from this relating to the gain? What are the different types of gains that you can receive from the capital market behavior? If you're an investor, what type of gain? What type of gains that you can get from this market performance, or when you invest or something, what type of gain you are aiming at? What is your gain? Yes, very good. What do you say for this share price appreciation? Because yes, very good, right? Yes, you all are there. Some capital gains and dividends. Yes, very correct. Right. Because some investors, we can't categorize, but from their nature, from their experience, right? Most of you might be, buying and selling shares, and you will be really watching and on the market price changes, and then you suddenly sell your shares and then again buy something, right? So these are capital gains. Rather, you invest on a particular company and keep that investment for a long time and then trying to satisfy with the dividend. Right? You are expecting the company to pay more dividend. Some others, they're expecting the company, share price to be, change during the time period, and accordingly they change their behavior. Right? So then you will be able to gain these capital gains and dividend. Why all this stuff? Because shareholders or investors or whatever, right, when they are investing in this company, the reason is the company has this operational environment, economical environment, right? So they are changing their policies and they are changing their performance practices and the level of this income, earnings, everything, it's changing. So accordingly, some investors are interested on, but in this share price appreciation, this movement, right? They don't want the share price to go down. So this share price appreciation, and some investors, right, they satisfy from the dividends. Okay, so then they the the first category, the capital gain people, they what they're expecting is they prefer the company. That means they're expecting the company to retain their profit and then to to go for more expansion, growth, and everything, right? That means because to pay dividends and to invest, to reinvest in the company, two things. No? So one particular category, they expect the company to invest, to retain their profit, and then to go for more growth opportunities and get growth opportunities and so on. So then what happens? Then rather paying their earnings as dividends and keeping with them and investing on something uh, to helping assisting the company to grow, then definitely their prices in the market, right? Their prices are going to increase. So then they take the advantage. I hope you got my point. So these type of shares we give a name growth shares, right? The finance people, you might be knowing this stuff. This is something finance, and so they just take the advantage of this rapid upward movement or the share price appreciation that happens in the capital market. They suddenly they take the advantage. And on the other side, there are some other investors who satisfy, they want the company rather, retaining the profit and going for looking for more growth opportunities. The other side of the investors, they want the company to pay out, these dividends, as much as they can. And they are always looking at, okay, what's the dividend percentage and whether, comparatively compared to the last period and compared to this, how much they have paid dividend, whether it has decreased, whether it has increased, right? So that's the thing. So they are depending on this dividend, right? They are not, capital gain seekers. They are dividend, they are depending on the dividend. So then earnings per share, right? First category, this is the list, student. I know for sure that you all must have done or you all must have, in the company perspective as a student in a student role or somewhere you all may have heard seen this stuff. Earnings per share, price earnings ratio, dividend yield, dividend power, dividend payout. Okay. Uh, Earnings per share. Can you just read this for a few seconds? Please read. So find this type of a ratio, earnings per share. Per share. What do you mean by this per share? Dividend, preference share, it's not something else. Okay, my attention is unstable and I hope you can hear me. And why it is per share basis? Because for the capital market people, capital gain seeker, they always per share basis, what is the price per share. So like that, you want to interpret from the company's perspective, you are earning on the base of this per share basis, right? So when you are trying to apply this per share basis, you definitely, this is very simple, student, for those who are not very familiar with this, calculation, earnings per share. You don't have to remember, right? Always, these stuff, the numerator, denominator. Earnings per share means definitely the denominator would be the number of shares, right? So you need to divide something by the number of shares, then you will be getting that particular thing per share. So what is this particular thing? This is the earning. Earning on the numerator and number of shares at the denominator. Okay. So what is this earning scenario? Why? This earning scenario, why you can't take this net profit after tax directly? If you have preference dividends for the calculation purposes, say that you have a preference share and so you need to, because that is, something where you need to give priority, like you consider the debt securities, you need to pay the interest. So here also you need to pay the preference dividend. So from the earnings, whether you earn or not, right, you need to pay this. So that is, you are deducting this, whatever the dividends that is allocated to applicable to the preference shareholders, and then the remaining will be for the ordinary shareholders. So whatever the earnings available for the ordinary shareholders, the net profit after tax, the last element, you are dividing by the weighted average uh, number of shares or the number of ordinary shares issued at the end. What do you think? You take in the highlighted thing, you take the beginning amount or the year end amount. If you are not taking the weighted average one, what do you think? What would be suitable to use? Beginning price, sorry, beginning capital, yes, very good. That's the year end, right? If you are not taking the weighted average, weighted average is the most suited denominator as calculation wise, okay? Calculation wise, it would represent the ideal thing, but if you are not taking the weighted average, better to take the number of ordinary shares at the end. Okay? Right. Now what I want you to do is, okay, so please here this is for the calculation, but that you can take a paper and just start calculating. Let me open my attachment. I have uploaded a document called the Topic 4 Financial Statement Analysis Attachment. So please okay. So you have the P&L and the balance sheet given. Wait, I'm not sure with the screen. Okay, this is the document which I'm referring. You can see this is it says the Vicom Limited. Okay, so I have taken from a book for to get some easiness for the calculation. So you can get whatever annual report balance sheet. So this is the P&L and the balance sheet is also there. Right? So then you should be knowing where to get the earnings stuff here, net profit after tax and everything. And then where to get this number of shares part, you're expert in this stuff, right? Accounting, finance people. So you have this equity and liability. So then you need to take, something to take from here. 2 years they have given for the 2004 and 2005. Okay. So just refer this, and can you calculate the EPS for this Bipum Limited for the 2004 and 2005? You can take EPS and please calculate 2005 figure and 2004 figure. EPC. Please do that and share your answer once out. Students, yes, what's the EPS for the 2005 and 2004? I wanted you to calculate. Okay. What is this for the 2005? And then for the 2004? Yes, that is for 2004 then, because um, and each student, right? So if this is going to be tested on for the examination, so definitely this will be given not just as calculations, just to compare maybe 2 companies or 2 years. So then you need to get a 1 year and the other year and do the comparison, or else you need to get one company and the other company and compare 2 companies, because comparative analysis are different. You can compare with your past results, you can compare with your competitor, you can compare your results with the budgeted performance and the actual performance, all right? So in whatever the way, you would be definitely given a calculation for the comparative analysis, right? So then make sure to calculate for the 2 years or for the 2 companies. So what is for 2004? Students, other EPS, complete the number. Yes, Niraj, what about 2004? Anybody else? Anybody who's having a different answer? Everybody done? Right. I hope you can see the screen. So EPS, so this is the net profit after tax and the minus paper dividend, then that is the numerator. And then this is the denominator. And workings, number of shares would be, first of all, you need to calculate the number of shares. So how you're going to calculate the shares? So let me, if you're not very familiar, if you are coming from another area, so this is, you need to go to the balance sheet and we are concerning on the denominator. So here it says ordinary shares, you need to get this stuff from this part, capital and reserves. So ordinary shares, they have said 5 rupees per share and 10,000 in rupees wise share capital and 7,000 share capital for 2004, right? And per rupee share is 5. So then we're going back to the calculation. Then 2005 share capital is 10,000 rupees and 2004 share capital is 7,000 rupees, and this is in rupees, okay? And 5 is per share rupee, and the number of shares would be 2,000 and 1,400 for 2005 and 2004, right? So you need to get the year end share capital value. So that is why we took it from the balance sheet as at the ending period, ending date, right? So if you are not taking the weighted average, you need to take the year end balance from the balance sheet. So this is the number of shares, because we don't need the share capital here. We need only the number of shares here. So then 2,000 shares and 2004, it was 1,400. And when you calculate this earning, right, here what is the importance of what you want to do with EPS? You need to see how much of your earnings, how much you have earned, right, per share. For every share that you have invested in your share capital, how much you have earned, because investors, people are investing on this company. So per share, right, how much would be the earning? So here, rupees 5.55 per every share that you have, you have in your company, you have earned 5.55 rupees. And but in 2004, they have earned 6.44. What is favorable? I mean, just by looking at, in EPS, What is good for your EPS to be, increased, or for you to get a decrease? But before going into the reason, just by looking at the figures, which is for EPF, what you want to expect? You want to decrease your EPF in the comparative, in the consecutive years to the future, or you want to increase? Definitely you want to increase now. You are expecting a high earning now, right? So per share. But here, okay, so this is if you are trying to interpret how we are going to interpret. So this can be interpreted, okay, as at the 31st December 2005, this Bicom Limited company, they have earned 5.55 rupees per share on ordinary share. Okay. But however, what has happened in 2004, the previous year, they have been able to earn 6.44 rupees per every share, right? So then what has happened here? How you interpret? This is the calculation. Now you interpret. How you are going to interpret from the company's point of view? Is this a favorable situation or unfavorable situation? Then what could lead this situation? What could be the factor for you to result this, decrease? Anything on chat? First, just let me know whether this is a favorable, comparing with the 2005, 2004, favorable or unfavorable. This is not favorable, like just by looking at the figures, but you can't be just, limiting your analysis. No, this is unfavorable. Yes, Janani, this is unfavorable. And also, Niraj is saying this is increase in the number of shares. It has resulted because of what? The company has gone for a new share capital, right? They have increased. So in the decrease of this EPS will be resulting because of what? Larger shares they have in 2005 compared to the 2004. That means they have gone for a share issue. So that's the reason, right? Then you need to analyze, okay, why, what caused them to go for this, and whether you are going to, how you are going to overcome this, to increase this for the next term. Okay. So just this is unfavorable by looking, in a comparative way, but this has resulted due to the ordinary number of ordinary shares has increased in 2005. Okay, right. So moving on, and apart from the dividends attachment, you can use the year-end balance. Weighted average, we need to give so many information, opening balance, and then everything. So you can just, because normally what we are giving is a P&L, or the statement of financial performance, and a statement of financial position, right? A balance sheet. So then that will be denoting the year-end balances. No, so better to take the number of shares at the end. Okay. And for the rest of the calculation for the PE, dividend yield, dividend cover, you need another factor, another information. That is, for the purpose of calculating PE ratio, dividend yield, and dividend cover, assume that, students, this is sometime back, okay, in 2005, 2004, forget about the year, just focus on the calculation. Assume that the market price of ordinary shares of Vicom Limited at 31st December 2005 and 2004, respectively, it was 36.5 rupees in 2005 and 34.5 rupees in 2004. Okay. Now, having that, because you need this information, that attachment, it just contains the balance sheet and the P&L, so you need this additional information for the rest of the calculation. Now, can you read this for a while? What is this PE ratio? student, we didn't explain, we didn't go through this interpretation. Sorry for that. Before moving into the PE ratio, this is the interpretation uh, we discussed, but the slide, this is closely watched by the investing public and are considered an important indicator of the company's success. This is EPS. Because of this importance, many companies disclose it in their published financial statements. So EPS definitely many companies tend to disclose it through their financial statements, having identified the importance. Okay. And this is the interpretation for the year ended 31st December. This Vipum Limited earned 5.55, and then in 2004 it was 6.44. And the decrease of EPS in 2004 5 was due to the issue of a large number of ordinary shares during the year, right? So that is okay. Then what do you mean by this price earnings ratio? Shows the relationship between the market price and the EPS. Earlier, see, it was really simple to remember this. Earnings per share. Earnings comes on the top, and the per share, the number of shares coming as at the bottom or the denominator. Price earnings ratio. Price comes PE in shortened term. So we use this PE. P to denote price, E to denote earnings. PE ratio means P comes as the numerator, E comes as the denominator. Right? So P means price, E means earnings. Market price per ordinary share comes as the numerator, and earnings per share, which you calculated for the first part, that one coming as the denominator. So this shows what? Definitely the relationship between the market price of a share and the earnings per share. Why? Why? Because normally, generally, companies use not companies, they have this current and existing and potential investors now, right? As you all said. So in deciding, right? So some are capital gain takers and some are dividend takers. So then mainly this capital gain, like the EPS, those who are, targeting at this market price movement, appreciation of market price and everything. So for them to decide on, for them to decide their best buy decision, right? So then for them to decide on their best buy decision, they use this PE analysis, right? Price earnings ratio analysis. So how they are going to decide what is their best buy? So they interpret, right, by looking at this PE ratio, they are saying, this relates with the company's growth opportunities, right? So because they are trying to look at this, the market price and the earnings, how they have earned, how much they have earned per share, and what is the market value given by the market performance per their share, right? So then by looking at this, they will be deciding, for them to decide on this best buy, they interpret this higher PE ratio would be, that is the favorable situation. They are looking for a higher PE, like they looked at a higher EPS, because companies don't want to reduce their earnings per share. Likewise, they are expecting existing potential investors are expecting the PE ratio to grow higher, right? Higher PE ratio would be the ideal situation of the favorable situation. So then how they decide, okay, this is the best buy? Say that you have two companies, one company's PE ratio is, high compared to the other one's PE ratio. Then you will be definitely going for this best buy decision with the higher PE ratio. The company which has the higher PE ratio. Why? Because they think the company which has this higher PE ratio has, ample growth opportunities. You got the point? So there would be, many opportunities for the company, for them, which bears this high PE ratio. But on the other hand, in the opposite, so companies with limited growth opportunity will be resulting a low PE ratio, right? So that's how they interpret their best buy decision. And I'm reading, shows the relationship between the market price of a share and the company's earnings per share, the relationship. P comes first, PE comes down, indicates the level of investor confidence. Where higher the ratio calculated, higher the level of confidence. For them to go for a buy decision, for them to decide what is the best buy decision for them, then that results in their investor confidence. So if it gives a higher PE ratio with high confidence, they invest thinking that this company is having high growth opportunities in future. Okay. So that is why you are going for this capital. Sorry. Okay. And the ratio, right. So you need to do the calculation. So can you do the calculation here? The PE ratio. Can you do this calculation? And tell me the PE ratio for 2005 and 2004. It's easy, right? Like no much calculation. Why? You know your EPS and the market price is directly given. So it's a matter of dividing this one from the answer you got for the previous calculation, EPS. Please do it and tell me yes. Okay. We have this. I have done the calculation. So market price PE comes first and earnings per share comes down. So then 6.6 times. And do you think this is in rupees or something like that? Is this in rupees? No, right? So see how we are going to interpret. And this is the market price and the EPS. So 5.4 times. That means what? Your market price from your earnings, your market price denotes like, 6.5 times. Why? For the earnings per share. That means this is good. But here, only 5.4 times as of your earnings will be resulting as the market price. So the interpretation, how we are trying to interpret, is this okay? The calculation, have you all got received these calculations, students? Have you all done? Yes? No? Have you done the calculation, student? Thank you. Right. So the interpretation would be going back here. This ratio indicates that the market price of an ordinary share of Vigo Limited as at the end of 2005 was approximately 6.5 times the amount that share earned for the year. Market price represent 6.5 to 6.5 times that the amount that share has earned. Earned means EPS. Earned per share means EPS. Their EPS is 6.5 times, sorry, their market price is 6.5 times as of their EPS. That is good. So the prospective investor may compare this ratio with that of the other companies in the same industry, and then they decide on their best buy decision. Okay. So that is the two ratios, and the rest of the ratios we'll do next week. Any questions, students, up to this point? Only two ratios we have done, and three more ratios that is really simple, right? Any questions, students, up to this point? Anything you want to share? Any issues? Any problem? Anything on chat, please? No, nothing. Okay. So what we'll do is we'll do the rest of the other week and definitely finish. But students, we will not be meeting on next week. All right. So remember that you might be having other sessions, but I'm not too sure on that. And financial accounting 6 to 8 times. The next weekend, we do not have financial accounting from 6 to 8. Okay. So then we will be meeting on the week after. Right? Okay. So then, okay, thank you for the participation. You all have, put the answers, but no, nothing on chat for this. Okay, thank you for the participation. See you all in 2 weeks.